car aficionados across the globe have been engrossed in the escalating rivalry between Tesla and Ford. In a surprising turn of events, Elon Musk, the visionary leader of Tesla, has declared his intention to take over Ford. This raises questions about his financial strategy for such a bold move and the implications it holds for the future trajectory of both entities. Ever since Ford made its foray into the electric vehicle arena, it has been toe-to-toe with Tesla, mirroring or even eclipsing Tesla's innovations. Notably, Ford's F-150 Lite outpaced the unveiling of Tesla's Cybertruck, quickly becoming a global bestseller in the electric vehicle category. In the showdown between the Tesla Model Y and Ford's Mustang Mach-E, the latter, despite its higher price tag, is celebrated for its striking design and feature-rich interior. Which model captures your preference? Yet, Ford has encountered financial turbulence recently. The sales for its electric venture, Model E, have been dwindling, with the division facing a daunting 40% negative margin. This financial strain might compel Ford to postpone or cancel upcoming vehicle productions. Conversely, Tesla's appeal as the premier electric car brand continues to soar globally, with remarkable sales figures in Asia and Europe. The Model 3 and Model Y, for instance, are leading the charts in Norway. Elon Musk's ambition to cement Tesla's market dominance by acquiring a faltering Ford comes as no surprise. But the source of funding for this acquisition prompts curiosity. The soaring demand for Tesla has catapulted its stock values, significantly boosting Musk's wealth. Despite manufacturing fewer vehicles than Ford, Tesla boasts a market capitalization that dwarfs Ford's by tenfold. Musk, with a net worth topping $260 billion, ranks among the globe's wealthiest, potentially on track to reclaim the title of the world's richest. This financial prowess renders the acquisition of Ford, with a market value slightly above $50 billion, well within reach. This acquisition signifies a pivotal moment in the storied competition between Tesla and Ford, reshaping the dynamics of the electric vehicle market and possibly catalyzing a wave of technological advancements within the sector. The unfolding of this merger holds much anticipation for what the future will unveil for these automotive titans. Despite the hefty $50 billion investment, Musk's move to acquire Ford is strategized for high profitability. This tech mogul is renowned for his profit-generating acumen and strategic foresight. Closer to dominating a global automotive giant, there's speculation that Tesla might ramp up its production capabilities with significant investments in Chinese factories, enhancing its profit margins per vehicle. Musk's phased acquisition of Ford could emerge as one of his most astute strategies, given the escalating demand for Tesla vehicles. Opting for a gradual takeover mitigates financial strain, allowing Tesla's earnings to fund the acquisition progressively. This approach appears to be already in progress. But what does this entail for the future of Tesla and Ford? Essentially, it means that Tesla and Ford will start collaborating progressively until they form a single corporation. Surprisingly, the initial steps in this direction have already been taken, as both companies have agreed to share their respective superchargers. With a total of 22,000 superchargers, instead of the previous 12,000 from Tesla and 10,000 from Ford, the frequency of charging points will significantly increase. This makes Tesla and Ford electric vehicles even more appealing for long distances. This development is already reflecting on the stock market, with Ford's and especially Tesla's stocks rising, while their competitors like Lucid and Rewood are seeing a considerable drop. The positive interaction between Tesla and Ford signifies a growing closeness between the companies. Both are working to make this transition to a single type of charger as seamless as possible for consumers. Tesla and Ford are developing adapters for their chargers, as replacing all existing ones would be costly. These adapters will be marketed at an affordable price, and both companies ensure there will be no penalties for users in terms of maximum charging speed. Clearly, both companies are committed to making this partnership as beneficial and painless as possible for customers. It's a refreshing shift to see companies prioritizing consumer benefits over solely focusing on profits. The emerging cooperation between these automotive giants, Ford and Tesla, hints at a potential merger on the horizon. This partnership holds strategic value for both entities. Ford stands to rejuvenate its brand within the electric vehicle sector, enhancing the appeal of its offerings. Conversely, Tesla, with its sights set on expanding production, could greatly benefit from Ford's vast manufacturing expertise. By consolidating their supply chains, Tesla could realize considerable cost efficiencies. Presently, Tesla relies on a diverse network of suppliers, but tapping into Ford's well-established supply chain could liberate resources for a phased acquisition of Ford shares. Moreover, Ford's robust presence in China, a market Tesla is yet to fully penetrate, represents a strategic opportunity for Musk to expand his foothold in the Chinese market. Nonetheless, it's crucial to approach this prospect with a measure of caution, as there are factors that might prevent a full merger from materializing. Elon Musk has openly expressed his respect for Ford and the stability it embodies. During Ford's challenging times, Musk has been vocal in his admiration for the company and its strategic potential. This mutual respect and recent collaboration suggest that a partnership akin to the Stellantis model, the merger between Fiat and Peugeot, might be more feasible. Such a partnership could be more advantageous than a complete takeover by Musk, which would require significant investment to revitalize Ford's profitability, potentially jeopardizing Tesla's reputation. Despite Tesla's success, it faces its own set of challenges, particularly in meeting production demands and maintaining product quality. The highly anticipated Cybertruck, for instance, has yet to be released, and the prototypes seen thus far have raised concerns over quality. The acquisition of Ford could potentially introduce more complexities for Tesla rather than solutions. There's a risk that Tesla's challenges could negatively impact Ford's brand. Strategically, Tesla might prefer to pursue a partnership, avoiding the risks associated with outright ownership. A partnership would enable Tesla to utilize Ford's manufacturing capabilities, make inroads into the Chinese market, and expand its presence in regions where it currently faces difficulties. This approach offers a pragmatic way for Tesla to benefit from Ford's assets without inheriting its challenges. While the idea of Elon Musk leading Ford is intriguing, a collaboration could prove to be a more pragmatic and financially sensible route. By sharing resources, production capabilities, and platforms, both companies can enhance their market position and success. A collaborative effort, particularly with Ford focusing on producing smaller, more affordable electric vehicles, could represent a significant advancement for Tesla's ambitions.